The US Federal Reserve has raised its official interest rates by 0.5%, the highest rate hike in 22 years. Joining us live now is Evan Lucas, the Chief Market Strategist at InvestSMART. Evan, good morning to you. Is this just a one-off or the start of something much bigger?
Of much bigger in terms of what it said this morning. They have clearly highlighted that they are going to do it probably at least 2 more times this year, and then we'll probably move back to 25 basis points or 0.25 of 1% moves from there on in. What was more interesting, though, was the fact that they have completely ruled out going harder than that. And what I mean by that is that some had even forecast that they could move by 0.75 of 1% and do that several times over. Their lean, therefore, is that we now have a clearer understanding. We know that they also want to start rolling off their balance sheet. And what we mean by that as well is that they have actually acquired over the last 2 years a balance sheet that is now almost $9 trillion in size, trying to basically support the US economy. So they're going to let them actually mature and then buy back some of them and just slowly but surely. So it's all around controlling inflation. It was all expected, but the big takeout for what pretty much markets and most people were sort of looking this morning is the clarity, understanding, and direction of the Fed is now locked in, and we no longer have this speculation that they could be really hawkish or really dovish. We know what they're doing. It just gives it a little bit more stability. It's certainly going to slow the economy down. That's what they need to do and want to do, but maybe not as hard and fast as some have been forecasting and sort of led to market issues.
Okay, Evan, so will the action of central banks this week really curb inflation?
So this is the great debate. So we're not just having this for the US, we're obviously having it for here in Australia as well with regards to how we go. So inflation, when we talk about inflation, we talk about in percentage moves, and I think that's sometimes forgotten. And what I mean by that is that obviously we look at quarter-on-quarter moves or year-on-year moves. It's risen by, at the moment in Australia, it's risen by 5.1%. If you look at what it was to the March quarter last year to where we are this year. Why that matters is that inflation, therefore, will have periods where it will slow down naturally because we're not going to be growing that kind of level. Don't forget, 2021 was an incredible year in terms of economic growth, issues that we had around supply, the absolute, inverted commas, animal spirits that we had at the end of last year when New South Wales and Victoria came out of their lockdowns and the sort of this FOMO that we had. All those things will actually what we call roll out. So those months won't be included. So inflation will actually not grow at the kind of levels that we've seen. So it will come back. Naturally, it will do that. The thing that you need to remember, though, is that the price increase is now probably here to stay. It won't actually decline. So, yes, inflation will slow down. It will slow down probably, I think, actually faster than some people realize because of exactly what I'm talking about. The data continues to evolve and obviously catches up, and everything that we've had before will slow down. The question that we're really asking is how much longer supply chain issues happen. And that, I think, is the core question here is, the China COVID zero story is still a big, big problem for the world. You've still got issues in Southeast Asia and places like Taiwan with supply. Australia is still also struggling with getting its supply back on from the floods. So it's those things to really watch around inflation. Central banks will certainly bring it down, but it's the supply side that we need to see.
Okay, and how have the markets taken all this news, Evan?
So, as I said, the interesting thing the market looked at is the stability and the clarity around what the Fed is now doing, and they jumped. We saw the biggest one-day move in the US since March 2020 to the upside. So you saw the NASDAQ, the Dow, and the S&P having those best days they've seen since in 2 years, and almost 3% for the Dow and the S&P on the idea that we saw this last time around as well. If we actually look at when the Fed raised rates back in March, we had a 6% rally in the US markets off the back of the understanding of what they're doing. Do we go that through again now leading into June where we have this rally and then we fall back into the meeting with the unknown about what's going to happen? So the markets have seen it as a positive because they get certainty, but then before we come to the next meeting where we expect rates to rise again and therefore the uncertainty comes on that. So unfortunately, the conclusion, volatility remains.
Sure does. Okay, Evan, thank you. We'll talk to you soon.